Okay, everybody, it's me, Gregory Mannarino, and let's talk, you and me. It is my post-market wrap-up on this Tuesday, July 20th, 2021. So, nice little rally here on Wall Street. A lot of buying. You all knew this. You all knew it. I told you that they were going to buy the dip. They're going to buy all the dips moving forward. The easy money is not going to stop. And the market is shrugging off inflation fears. It's shrugging off talk of this thing that's going around. You know, they're trying to scare the living hell out of everyone about. So, yeah, this is just the norm. I mean, what else would you expect? The market is not allowed. It's not allowed to have a correction anymore. We get these drops from time to time, but they just get bought right back up. And again, I want to talk to you a little more about the fear trade. Know what you're looking at, people, and you can profit from it. When you see the fear trade, like we had yesterday, how it started the day today, when you see the 10-year yield drop like that, it doesn't just drop for no reason. It drops because cash is making its way to the debt market, perceived safety, you got to be kidding, and then that dollar strength at the same time. That is a fear trade. When you see that, you know it's time to buy. I don't know another way to put it. All my lions know this, or at least should. All right. The big meltdown that a lot of you are waiting for is way off. Okay. And it's going to happen not in the stock market first, but the debt market. When the debt market sells off rapidly, a sell-off in the debt market would cause an uncontrolled spike in bond yields, 10-year yield more specifically. Okay, that's the benchmark. When you see that, that's when you literally know it's time to run for the hills, close long positions, start betting against the market. It's a way off, people. The Fed is not done buying assets by a long shot. And I told you, and I'll tell you again, open up another window right now and go to the Federal Reserve's website and have a look at their balance sheet. The higher it goes, we're at 8.2 trillion and change, the higher the stock market's going to go. It's literally unstoppable. Okay, earnings don't matter, forward guidance doesn't matter, PE ratios don't matter, nothing matters anymore. It's just a fake market that's going to continue to get bought up as the easy money just pours into it. I know you get it. And I know there's a lot of people, in fact, let me tell you what bothers me. Okay, I'm going to let you all in on a big secret if you don't know. And this happens every single time. And I'm not kidding. Whenever the market sells off like it did Friday and, well, especially yesterday, I got people writing to me saying, oh, Greg, I went short the market and I got killed. Yeah, that is going to happen to you. You can't short a fake market. If you short a fake market, knowing that there's a fear trade going on, you're gonna get eliminated. They're gonna take your cash. Is that what you want them to do? That's what this is designed to do. If you can't play the game, stay out of it. If you don't know what to look for, where cash is moving by keeping your eye on the debt market, the dollar, crude oil, well, then you really shouldn't be here. You should not be trading the market. You should be maybe stacking gold, silver, my most favorite asset of all time, maybe, putting some cryptocurrencies into your portfolio. But know what you're doing, people, and know why you are doing it. More importantly, we're trading a fake market. Okay, so with that said, nice rally today on Wall Street. Did you watch crude oil? Turned around nicely, pulled the energy sector higher, pulled the financial sector higher. The entire stock market finished higher. People, I'm going to say it again. What is crude oil? Yeah, the lifeblood of the military freak show industrial complex. Gold didn't do much today. I think it actually had a fractional loss. Silver did take a little bit of a hit. Okay, whatever. It's not real. There's no price discovery, but that does not mean you shouldn't be hoarding it. Betting against the debt hyper bubble. All right. Cryptocurrencies today, the big ones fell under pressure. Dash, something's going on there. A lot of buying with regard to Dash. So keep your eyes on Dash for now. Anyway, let us move forward. What I want to do, people, is just talk briefly about a few things. So we found out that building permits here in the United States has now plunged to an 8-month low as sky-high home prices are sidelining buyers. I don't know another way to put it. This is a phenomenon. This is how you know there's a bubble in housing. When the average person making an average salary is priced out of buying an average size home, you know there's a bubble. So for those of you out here that are asking me a lot if there's a bubble in the housing market, absolutely. We have multiple bubbles in this market. There's not one asset today, not one single asset today that is fairly priced. I mean, when you have central banks, none more so than the Fed, doing what they're doing, this is emergency monetary policy, basically buying it all, artificially suppressing interest rates. It causes distortions like you cannot believe across the spectrum of asset classes. So nothing has a fair value right now, and it's all twisted and distorted. But that does not mean there are not things to take advantage of here. With an induced or forced risk-on environment, meaning, equities, stocks, higher, well, the first thing you should be looking at is suppressed assets, okay? When people are looking over here, for the most part, you want to be looking over there, okay? Over there, suppressed assets, physical gold, physical silver, and yes, I still believe cryptocurrencies too, okay? These are suppressed in this environment of maximum distortions, and you still, of course, want to take advantage of a market that seems unstoppable to the upside because the Fed's buying it all. Again, forget what's coming out of any other YouTuber's mouth or whoever they might be. As long as the Fed balance sheet, I'm going to say for the gazillion time, keeps rising, 8.2 trillion and higher, okay, debts and deficits hyper exploding, as long as this is happening, the market will go up, okay? And if you watch that 10-year yield, gauging by what I've taught you, if you've been following my work, look for the fear trades. Look for the drops in the 10-year yield along with a higher dollar. When the stock market drops along with that, you buy those dips. You buy those dips. And this is how you rip the freaking market's face off. And again, people, there's so many ways to play this. Like I tell you, if you subscribe to my free newsletter, it's 100% free. There's a link in the description of this video. I fire out. In fact, I fired one out today. Look at the stock picks on my website right now, traderschoice.net. They took off today. People, buying those dips. And, I put out suggestions of how to play these things, from a lot of risk to kind of low risk. People, look, I got your back. I'm going to keep you ahead of the curve here. With regard to a real market crash, you're going to know when it happens. Not drops in the market that get bought up and then you get people running around, oh, this is the big one. You got to be kidding me. They don't know what they're looking at. They have no clue where cash is going, why it's going there. So, of course, you're going to get these people panicking. Can't make this stuff up. Anyway, like I said, so there's a lot of buying today. And the market's shrugging everything else off. What else would you expect? What else would you expect? Really, surging inflation like we've never seen before. A stock market that is so disconnected from reality you can't possibly believe it. It's even difficult for me to get my head around. And I study this stuff around the clock. It's just not going to stop. And I know it's very frustrating to you, the suppression of, let's say, physical gold and silver via the derivative. It's incredible how you have a hard asset deriving value from a derivative. It's completely upside down, but that's how they rig the market, okay? Everyone knows it's rigged. Commodities Exchange knows it's rigged. The SEC, they don't want to do anything about it whatsoever. They won't do it. The corruption that we've seen unfold over the last several years with regard to this market and everything connected to it, politics, is just off the Richter scale. Anyway, all right, people, look, that's it. Important video. Lots of stuff I covered for you. That's it. I'll see you in the morning. Looking forward to it.